Good morning, everybody. Welcome to Coffee with Casey. We get together and talk about market conditions, market strategies. Never more important than today, right? So the market is moving, interest rates are moving. What does that mean? What does that mean to buyers? What does it mean to sellers? If the rates tank, and they are tanking, what does that do to inventory? And then what does that do to prices? So let's first take a look at the first chart. Now, the first chart is my favorite, and this is what I check every day. If you want to check anything on where does it all start, go to a chart for the 10-year bonds and find out what that's doing, where interest rates are headed, right? So the 10-year bond is currently at about 3.6, 3.65, as you can see. Now, that has moved down significantly, as you can see, since July, right? So in July, it was about 4.5. Now it's 3.6. That's almost a full point. So that is showing you that interest rates are really taking a nosedive, right? So right now you can get probably a 6% 30-year fixed loan. On a 5-year ARM, you can get about 5 1/8. So now interest rates have returned to normalcy and they're continuing to fall. The Fed will announce they're going to drop maybe 50 basis points over the next day or two. But this has already taken that into account, right? So it's not a new 0.5 point drop. They've already taken that into account. The mortgage rates are based on these bonds. So mortgages have already accounted for the fact that we know the Fed is coming out and they're going to bring rates down about 0.5 point. So what really does that mean, right? How does that affect the market when rates come down? So this chart is showing that Fairfax County inventory and interest rates over the last so-odd years, since 2014. What it shows is that when interest rates go up, inventory goes down. Now, there's one anomaly in 2020. That's because we had a pandemic. The beginning of the year, they were way down because we had a pandemic. Then they increased even though interest rates were increasing. So it's just an anomaly, right? You have to throw those out. But basically, when interest rates go up, inventory goes down. When inventory goes down, prices go up. That's the phenomenon we had. And I know people haven't been listening to this for a while, but you know that I talked about the perfect storm. In 2021 early, I said, there's a perfect storm brewing. We have really low interest rates. We have really no inventory. I mean, something's about to give here. It's a perfect storm, right? So, of course, prices went up through the roof, all right? This is the same time period that we're now looking and going, okay, interest rates have gone up, inventory went down, prices went through the roof. Now interest rates are tanking. Now what? Well, here's the first thing that's going to happen. The inventory is going to go up. See that inventory click right there? That's this morning's inventory that I looked at. And you can see as interest rates are taking their dive, inventory is going up. Now, when inventory goes up, that is the competition. That is when prices get soft. So let me overlay the pricing chart. And now you can see that the red line is pricing. They're moving with interest rates. In the last, I would say 3 months, prices have adjusted at least 6 to 8% in most markets. 6 to 8%. So what's happened is this. We need to know kind of where we are, right? Prices are artificially high, right? So I was at a listing yesterday, and their home, if it appreciated at the rate of inflation, is worth $1.1 million. It's selling, because there was no inventory, it's selling at about $1.35 million, right? So it's $250,000 higher than it basically should be, okay? Why is that? It's because inventory went down. Look, see the green? That's the inventory going down. There was nothing to buy. It pushed houses up artificially high. Yes, we were 20 to 22% higher than we should have been. So people were paying 20, 22% premium for housing. when interest rates have gone down, inventory has gone up, and that premium has adjusted, right? So now what you thought was 1.35 may now be 1.3. And the question now we all have is, the question we have at this point is, should we wait? Prices are getting soft. Well, I will tell you that that green line will continue to go up and the blue line will continue to go down. When the green line goes up, prices will come down. It's just the way it is, right? So my direct statement to the seller yesterday was, if you don't like 1.3, you're going to hate 1.2. And you're really going to hate 1.15. Because that is where prices could go. Let's face it, the house is really worth 1.1 million. So as inventory goes up and the prices get softer, where is the bottom? Where is the bottom line? How low can it go? Because I've been through markets where it's like, I have no idea where the prices are going to end up. But now I do. The lowest they can go is 1.1 million on that particular house. So maybe the neighbor's got 1.375 or 1.4 right now. Pray to God you can get 1.35, 1.3 minimum. If you don't like that, the problem is that I really truly feel that with inventory going up, the prices are going to be going down. So we monitor this every week. So on the, we're getting very organized on this. In the first week, we're going to do success rates. The second week, it's like, let's keep an eye on the inventory for the first 2 weeks of this month, right? And then we'll do another success rate charts the third week. And the fourth week, we're going to do, the end of the month, where's the inventory going? Because we need to watch that bottom line. As the blue goes down and the green goes up, the red is going to follow. So every time we go in and list a house, we just need to be very cautious. So the question is this: we move the prices down, are you selling too low? Now, good question. But here's the answer. Anybody that follows this show knows I'm very big on doing a predictive analysis. So let's say we take two numbers. Let's take this current listing. Let's say we were normally go, let's test 135. Let's see if the market is there. And if it's not, let's go to 1.3. Let me go back to this example of this house. They have a neighbor, nice house, updated, everything looks great. They put it on for 1.35, didn't sell. My model says it's worth 135, right? Soft market, maybe 1.3. So here's the deal. Why is that home not selling? And I'll tell you why. Because the person that listed it did not do a predictive analysis. They didn't go, let's test 1.35. Let's see if anybody's coming. Anybody coming? If nobody's coming, you got to get to 1.3. You would have sensed or known that the market is shifting and you needed to go to 1.3, right? They should have launched at 1.3 million. So we now have that information. We will launch at 1.3 million just to make sure, is the market there, right? We need to get ahead of the market. So why is a house that's just like theirs, that should be selling for 1.35, why didn't it? Why is it sitting on the market for 30 days? The answer is they didn't test the market prior to going on the market. If you're not doing a predictive analysis, if you're not going coming soon and testing a price, and in this case, we always come up with two numbers. In this case, it's 1.35 is what I think it's worth. I know it's probably worth 1.3. Right now, you don't know it's worth 1.3. So you can't test 1.35 because if you drop to 1.3, that might not even be your number. So we need to take the lower number. So we need to read the market, react to the market. With interest rates going down and inventory going up, trust me, the prices are not coming back. They're not going back up any higher. So the thought is, do you wait until the spring? Well, the interest rates have come down, the inventory's gone up, the prices have come down. So spring is not an option right now. I caution anybody on waiting till the spring. I think that we're peaking with prices. I think if you can read charts at all, as interest rates go down, inventory goes up, prices come down. I have no idea what's going to happen in the spring. I do know this. Currently, you can sell a house at still about 15 to 20% of a premium over what it should sell for inflation. I do know that, right? So that's something we need to take into account when you're deciding, what price you're going to put on, when you're going to sell it. But these things are critical right now. And a mistake, let me give you another example of a mistake. Let's say you're on for 115 and we're hoping to get 1-2. So we put it on at 115, we get a contract for 115. Seller doesn't want the contract for 115. They really wanted the 1-2. They counter back at 1-2. The buyer is offended because you countered back over the list price. But really, it's probably worth 1.2, or that's the price it was at. Buyer gets upset, buyer walks away. Seller would kill to have 115 now. Kill for it. They probably going to get 1-1. So it could have cost them $50,000 by countering over and not taking the contract, which that was the market value at the time. The market value is going down. So when you put it out and you have the whole market come walk in your house, whatever the price that market determines, that is what your house is worth. If you don't accept what that first contract is, it's going to go down from there. Prices will go down. I ran a chart. All of our sales this year, we've done $100 million in listings this year. 160 probably total, about $100 million in listings. 94% list exactly where we tell them to do, or saying our average home sells at $65,000 over list price for 122% of assessed value in 7 days. The group that decided to not make that change after the predictive analysis, and this is why it's so solid, that group sold at less than list price. They sold for 107% of assessment, and they sold at an average of 41 days. Now, when you sell in an average of 41 days, you've got home inspections coming. You got a home inspection, appraisal, VA financing, contingent on the sale of another home. There is no magic in 40 days. The magic happens in the first weekend. We must be disciplined. We must do it right. We must run the predictive analysis. And I will tell you that, again, all these examples are fresh. All these examples are right on track. 2 homes listed. One says, you're the professional, you do it, price it where you want. They just went to settlement. They settled on their house, they're gone. The other house, nope, I'm going to do it. Still on the market, still fighting, have a contract, fighting over home inspection. $50,000 was the request. And that's just not what we want to do. We want to make sure we've got the price we want, stimulate competition, get the highest price we could possibly generate, no home inspections. 93% of our houses do not have home inspections. You do not want to be in the group that has to get a home inspection. The last two, one had a $37,000 request for the home inspection. We want $37,000 worth of adjustments. To our credit, we talked them down to $3,000. And seller wasn't happy with $3,000, but $3,000 is better than $37,000. And it's better than the people walking and having to put a home back on the market and try and resell it, right? So we have to mitigate damage during that home inspection. And I'll talk to you, one of our shows, I'll talk about how do you combat the home inspection? What are your defenses for the home inspection? And that's a very interesting thing, because I will tell you that, pricing is very important, but should you have to fall into that home inspection, there's a way you negotiate that number down. How did we get from $37,000 to $3,000? How does that happen, right? And then sometimes we can look at it and go, you know, they may want 50,000, but they're 135,000 over the next highest offer. We're way on the house's money. Let's fight like hell, but if it's 25, it's 25. And if it's 25,000, you're still 125,000 over the next highest offer. So, you know, we have to be smart when we're dealing with these amounts of money. And you need, you know, I'm just going to say, the 93% that listen, they win. The 7% that don't listen, they lose. And it's clearly documented. So we really need to make sure that, and again, maybe the ones that lose, and I always, and this is what everybody has to do. Everybody on my team has to do this. This is what we tell them all the time. It's easy to blame a seller. It's easy to say, I told you this number and you took the other number, and let's blame the seller. Everybody wants to blame somebody else. That's not the way it works. You need to look at yourself and say, what could I have done differently to convince the seller? Did I do a poor job of telling the seller? Was I not emphatic enough? Did I not demonstrate it enough? So my whole life is trying to say, okay, I just must not have demonstrated the value of what I'm saying enough that they decided to do something else. So that's on, you know, everybody's got to look at it and say, what could I have done to have made sure that didn't happen? So, you know, so yes, now sometimes I'm more forceful with people. I'm saying, you can't do that. You can't do that. You can't do that. I got to come up with every reason why you can't do that. Every reason why you're going to make a $40,000 or $50,000 mistake if you go your way, not my way. So you can't blame a seller. You blame yourself, and you're like, all right, you know, 93% is pretty good, but it's got to be 100 because that 7% evidently didn't get your message correctly, and you got to take it upon yourself to make sure that never happens again. See that chart right there? That chart with inventory and prices and predictive analysis and where interest rates go and how does that affect pricing and where's it going to be in the future? That's my job, to make sure that sellers understand where the market is heading. And hopefully, if you're listening to Coffee with Casey, you're getting that message too. My name is Casey Samson. You've been listening to Coffee with Casey. You can reach me at 703-508-2535, or you can email me at casey@caseysamson.com. I would go to caseysamson.com, check on the market snapshot, and look at the information we have on the interest rates and how they interact with pricing and inventory and all of the rest of that. Very valuable stuff. But the best way to get it done, give me a call. We'll come over. We'll explain it to you thoroughly before you put your house on the market. If you're thinking about the spring, you need to think about the fall. If your family says, hey, I got to do it in the spring, that's the best time for a family, fine. We'll work out whatever it is. I just think there's a risk that prices are going to be way down in the spring than they are from today. So my name is Casey Samson. Reach out, 703-508-2535. We'll see you next week on Coffee with Casey. Bye now.